Hello everyone and welcome to the Compak Asset Management Market Rad YouTube update for October 2nd, 2020. I'm Moe Ansari, host of Market Wrap and also the Chief Investment Officer right here at Compak Asset Management. I appreciate all of you tuning in on a daily basis that you do for the last 30 plus years where I do the 1 hour radio broadcast. You can get the radio broadcast by simply clicking on the link below and you will get it downloaded every day on your smartphone or your smart device, whichever one you have, and you can get the 1 hour update every single day. I'm going to talk about the U.S. markets, the economy, obviously the elections, technical analysis of the markets, the charts that I like to show you. Let's start with the U.S. markets and the economy. Obviously the biggest thing moving the market and that will have an impact on the market and the elections is the diagnosis of the president and the First Lady having COVID-19. The president, as we speak, as I do this recording, is scheduled to be moved to Walter Reed Hospital for treatment there. Obviously, the president is in a high risk category. You've seen the charts that I've talked about over the years, over the months, where if you're over 65 and you have underlying conditions, then you're in a high risk category. All of us are praying, obviously, for the health of the president, and hopefully he'll recover soon and be back at the job. But we've seen this around the world. You can see that Bolsonaro, the president of Brazil, we saw Russia, the prime minister there, not Putin, Boris Johnson, the prime minister of Britain, Bolivia, Dominican Republic, Guatemala, Belarus, Honduras, Armenia. So it's all basically the countries that the leaders of all of these countries, but all of them, the good news is all of them recovered. And that is our hope, that the president does recover fairly quickly. But in the meantime, it creates a lot of anxiety as far as the market is concerned and the election is concerned. What I was looking at where the president is right now, he's got a 45%, while Hillary Clinton was at 47.5%. And this is in 2016, going into the election that we were seeing. And now we're seeing the same thing. Biden is slightly ahead and the president is slightly below. If you look at the numbers for Joe Biden, he's at 50%, the president is at 43%. But this COVID thing changes the diagnosis changes the whole thing. We don't know if the president is going to be able to perform his duties. Will he transfer power to Pence? What happens? It's all up in the air at this point in time. But looking back at 2016, Hillary Clinton, the president was, when you compare where Hillary Clinton was and where Joe Biden is now in some of the swing states. In most of the swing states, Hillary Clinton had a bigger lead than what Joe Biden has today, except 2 states when you look at the swing states. So the election is all up in the air. Nobody knows really. We can look at all the polls, but we don't know exactly what the outcome will be, especially with this new uncertainty of COVID and the president being diagnosed with COVID. How is this going to impact the election? How is this going to impact a lot of people who did not believe in the virus? Now, unfortunately, it is a much more of a reality to more people. And I think that might impact their decisions on what decisions they might make as far as. So we are going to have a lot more uncertainty, and uncertainty means volatility as far as the stock market is concerned. Now, looking at the stock market, there's only about 10 stocks, the 10 mega stocks that are moving the stock market. If you see this chart, it is all the mega stocks. If you take out if you take the other 490, and it is the dark blue right here, it is very close to the European stocks. So it's just 10 stocks that have really moved the stock market in the last, in 2020. That's basically what we've seen this year. If those stocks start to lose momentum, what happens to the rest of the market? If we get closer to a vaccine, I think the reopening stocks are going to do well. That is why having a balanced portfolio is so critical. I was looking at the numbers around a presidential election. You've heard me talk about that. If the incumbent is lost, the market is down about 1.9% in the prior 3 months. But if you look at 1 year after the election, you can see that it's not a big difference if the incumbent wins or the incumbent party lost. It's about a 1% difference. So as far as the election is concerned, markets know how to deal with elections. We've had them before and we'll have them again. That's something that we have to think about. What I've urged all of you for the last 6 months is not to make your investment decisions based on your politics. Whenever you do that, it is not going to pay off in the long term. But it does give us some idea, the market does, what happens. If you look at 3 months prior, when the incumbent party has lost, you can see that the market volatility has gone up. And now we're in this phase right here, 1 month prior to the election, and when the incumbent party is lost, we see a lot of more volatility in the markets. And that's what we're seeing right now around the presidential election. Well, one thing that the market has been very good at, and you've heard me talk about this quite a bit, is the 3-month window, August, September, and October. If the market is up, it usually the incumbent wins. If the market is down, the incumbent is lost. And it has a much more of a predictable historical perspective. Right now, the month of August and September are just about a wash. So it's October that's going to tell us where the election is going to go as far as the market is concerned. And I think in the next couple of weeks, we'll have a much better idea of where we go. As far as people are concerned about the integrity of the election, and I think that is something new that we have never seen here in the United States. You see the Republicans think that's only 50% of them believe that it could be a rigged election. If you go to the independents, they're sort of split. The Democrats think it's not going to be a rigged election. So those are the numbers that we need to think about, the integrity and the aftermath. How many people are going to accept the results of the election? And if we have uncertainty, that is something, or we have a contested election, that could be detrimental for the market. So we'll have to wait and see exactly how this plays out. By the way, I'm going to do a webinar on the 14th. You can go and just click on the link below right now, and that will register you for the webinar. We'll send you the link. It's about a 2-hour webinar that I do. I'll answer all of your questions, or try to get to as many of them as I can, and try to answer those and give you a much more detailed view of the markets, the global economies, the U.S. economy, and the technical charts. I'll go through them in a lot more detail. That's going to be on the 14th, so go ahead and register that. Let's go and take a look at the charts. The markets did come down last week. We saw the S&P come down to that 3220 support area that I talked about. We went to 3209. This week we went all the way back up to the 3400 number, but we are right now on both sides of the 50-day moving average. We just closed below the 50-day today, and so the markets are still going in this back and forth sort of pattern, and I think that is going to continue into this month into October. We usually do not make a low until the middle of October, and this year it might be different. Critical support is still at the 3112 area moving average. The 200-day moving average is the major support. Resistance is 3400, which was this week's high, and then obviously the all-time high, which is just about 3600. When we look at the weekly charts, 3200 is support on the weeklies, 3170, and then 31 obviously. If we break below that, then I'm looking at about 2965. If we break below the 200-day moving average. If you get below 2965, then I would really start getting concerned about these markets, that we're not in a correction, that we're not in a pullback, that we could be going into a bear market. I do not anticipate that. I still think we're going to come out of this. It's going to be choppy, but I think a lot of people are just sitting there waiting to just get out. And we have a tremendous amount of money that was not spent in the last 6 months. That could be a big move to the upside. We've got wave 1, we've got 2, we've got 3, we're going through wave 4, and the wave 5 target, even an extension of this wave 3 could put us at around 3750. That's what I'm looking at on a weekly charts on a longer basis. It might not be until the first quarter of next year that we get there, but I think there is going to be volatility. The Nasdaq chart, again, 50-day moving average is the critical support. We're still above that even after today, where the market was down about 2.25 for the Nasdaq technology stocks. Support is still around the 10,500. then right around 10,000, and then 9,600, which is the 200-day moving average. Long term, I still am looking at 12,200, 12,800 as the wave moved to the upside. Again, this is wave 1, 2, 3, 4, and we are going to go to wave 5 on the upside. That's what I expect to the market to do. We're not quite there. I think the wave 4s, as you've heard me talk about over the years on the daily broadcasts, are usually messy. They go up and down a lot more, and that's what we're in right now, is the wave 4. Longer term, I think, again, if you look at the weekly charts for the Nasdaq, we're going through wave 4 right now on the weeklies, and wave 5 on the weeklies is looking at somewhere around 15,000 for the Nasdaq on the longer term. But that might not happen until 2021, 2022. This is a much more longer term picture that I'm talking about as far as the weekly Nasdaq. So when we go to weekly charts, we're looking at longer time frames, and we're talking about the bigger picture. And we need to keep the bigger picture in mind, not get swayed by the day-to-day news headlines. Gold market, as I mentioned, 1850 was the support area that I talked about. We got to that 1870 to 1850 this week. We hit it and we bounced off of it. We're back above 1900. Long term, again on the weekly charts, our targets are a lot higher. But again, wave 4 is what we're in, and wave 4s are messy and choppy, and I expect that messiness to continue. But 1850, if you get much below 1850, which was the low this week, then I would not be surprised to see 1730 as the next support area. That's a long-term support on the weekly charts on gold. But if you're not in gold, and you have to have gold, I just think that there's better opportunities in the stock market on this pullback to get positioned into the reopening stocks, which might not pay off for 6 months or a year, and they might go down even more. But some of the prices on some of these reopening stocks, the good quality stocks that are down, I think those are an opportunity to accumulate some of those. And if you don't have the tech stocks that you should have been overweighted over the last 6 months, that might be an opportunity for you in the next couple of weeks to get positioned. I know it's going to be scary, but that's where the opportunities usually come along. The 10-year chart, and this is one that I'm paying particular attention to, interest rates go down when the bond market goes up. Interest rates go down when people buy, when they're running for safety. They're buying more of the 10-year government bonds. That has sort of gone sideways. It has gone nowhere. Unless we break below here and start getting below the 0.5 on the 10-year note. We're about 0.7 today. We've been going between 0.6 and 0.7. That's the interest rate for a 10-year note. If we break below 0.5, that would definitely be of concern to me, and that'll indicate that we might be starting more, we might get a deeper correction in the market. So that's one indicator that I would watch, how many people are buying bonds for safety. This gives you a quick perspective of where we are. Again, make sure that you send this video off to your friends or just co-workers, and just go to compak.com/YouTube. Don't forget to subscribe to this channel, because whenever I put an update out, if you are a subscriber, there's no cost. You will get notified of that. Again, if you have questions about your portfolio, feel free to contact us. We will be more than happy to get you a roadmap to get you not for the next week or the next month, but the next 5, 10, 15 years, how to get from where you are now to where you want to go. All you have to go is click on the link below, and we will do a free, go to compak.com and do a free analysis of your portfolio. Thank you again for joining me today for this update. And don't forget to tune in to the daily broadcast. Have a wonderful weekend, and I will be back with you next week.